Hey, everybody, how are you? And welcome back to the Living Legacies Podcast. Glad to have you. Hope we can educate you, potentially give you a little entertainment, just be natural and real to you guys, transparent, clarity first. So, last episode, we kind of talked about building that living legacy or that living legacy account, right? Kind of went over what that would look like, what it actually is. Today, we were tackling one of the most debated topics in personal finance, which is whole life insurance. Gabriel's role is pretty much the same. He helps on the top end, but also really it's all around helping families protect what they're building through thoughtful risk management and insurance planning, period. They're all financial tools. Those aren't competing conversations. They're complementary and working together in a good environment and really just working for families and people and individuals. It really is complementary to each other. So why protection matters? Gabe, let's start with the foundation. Why should families think about life insurance before they think about building wealth?
Yes, good question. Because wealth without protection, Teddy, and everyone else, really, that is just vulnerability. Life insurance exists because life is unpredictable. Think about it like this. If a parent or a business owner was to pass on unexpectedly, the financial impact begins immediately. You know, payments, bills, they don't stop. You got mortgages, you got car payments, college tuition. These things don't stop just because someone died. Life's going to keep on moving. So protection gives families that breathing room while they figure out what their next steps are, not to mention the grieving process of losing a loved one.
Yeah, protection, man, means a lot. And the numbers show why this matters, right? It's just it's a hard word to say. Statistics show these numbers, especially in America, they're big on numbers. About half of Americans own life insurance, which means millions of families have no protection at all. Research also shows that about 42% of adults believe they need more life insurance or don't have enough coverage. And according to the Federal Reserve, the average American household carries well over 50 to 100,000 in debt when mortgages and other loans are included. When you combine all that with funeral costs, loss of income gaps, debt, etc., it's easy to see why so many families struggle financially after losing a loved one, especially if they're the breadwinner in the family.
Exactly, Teddy. Think about the funeral costs alone. Funeral costs average anywhere from $7,000 to $12,000. And when you've got families that are living paycheck to paycheck, they don't really know where that money is going to come from. So what they get is an unsurmountable amount of pressure that lands on top of them, again, on top of losing that loved one, like you said. Life insurance really isn't about death at all. It's about making sure that the people that you love have options when life doesn't go according to the plan. So we have a protection principle, you know, you can't build a lasting legacy for yourself and your family and the generations to come if everything that you've built can be undone by one unexpected event. Protection creates this foundation that wealth can be built upon.
Yeah, that's why there's different tools or different jobs, right? Same thing in the financial industry. Same thing with insurance. Different tools with different jobs. And one thing I can tell clients all the time is that every financial tool has a job. Look at it this way: retirement accounts have a job, right? For when you retire. Investment accounts have a job, especially if you're an active investor. Real estate has a job. Everybody needs a roof over their head. Emergency savings have a job for emergencies. So where does whole life insurance fit, Gabe?
Well, I love that question, Teddy, because it's the right question to ask. Instead of us asking whether whole life is good or bad, ask what job you're hiring it to do. So let's look at term life insurance. Term life insurance, it's designed to provide affordable protection for a specific period of time. Think of it a lot like car insurance, right? Everybody's going to pay for car insurance because we know what accidents happen and they're just that, accidents. However, if you stop paying for your car insurance, much like term insurance, it goes away. However, think of buying car insurance in a block. So you will buy it for 7, 10, 15, 20, 30 years. That's how term insurance works. You're going to get a block of insurance for a set amount of time at a set price. Okay. Now, whole life insurance is designed to provide lifelong protection while also building cash value over that amount of time. It can also be referred to and is a permanent insurance, right? So, unlike the car insurance, we're paying into something that does more than just protect the accident when it comes. It also has a back end. That's that cash value or the accumulation of funds, right? Neither one is automatically better than the other. They're solving different problems. Whole life insurance, it's permanent. You don't ever have to worry about it expiring and now you have another set of bills or a different cost. At the same time, it builds in the back end. Where term insurance, it's going to be far more affordable. However, it does expire. And when it expires, well, now we're looking at a whole different set of problems.
Yeah. So, like, if I'm protecting a young family with like a mortgage, maybe some car payments, some debt that need to be taken care of, probably term might be exactly what they need, right? Or what I would need if I was the family and protecting my family. Now, that would just be to cover the cost just in case something were to happen to the breadwinner in the family or anybody that might mess up the income, or there might be a gap in income if one of those were to either pass or something critical or chronic or, terminally would happen to them. Now, if I'm thinking about like long term planning, business, succession, or creating additional liquidity, maybe really wanting to pass on generational wealth, stuff like that, building a real flexible liquidity account that also offers the protection I need. Whole life might be the conversation that is deserved at that point, right?
Exactly, Teddy. Good thing to bring up because sometimes families do need term, and term, it serves a great purpose. Sometimes they're going to need whole life. Sometimes they're going to benefit from having both. Good planning is going to start with goals. It's not just about looking at what product is the best or what fits me for right now and today. When we come to wealth management, Teddy, I really like to say it like this to our clients and to the audience out there. It isn't about a feeling, although you do want to feel that your goals are getting completed, but it's about a plan.
Awesome. I love that. That makes a lot of sense. So now it's like cash value, cash flow, and liquidity. And when helping families build wealth, create wealth, even starting from anything, it doesn't matter where you start. You have to build from something, right? Unless, you're born into rich family when it's given to you. Even those people, they have their rules and regulations. And one topic that comes up over and over is liquidity and flexibility. People naturally focus on things like rate of return, but access to capital is just as important. So where does cash value fit into that conversation?
Cash value. Cash value is one of the defining features of the permanent life or whole life insurance product. As premiums get paid, part of the policy is going to build up a bucket that we call cash value over time. And that cash value can become a financial resource during your living lifetime. Depending on the policy and how it is managed, policy owners may borrow against that available cash value. So these loans are going to accrue interest and reduce the policy's death benefit and availability value if they're not paid back. So they should be used very thoughtfully because it does affect the generational impact. But it's not designed to replace your retirement or your investment portfolio. As a matter of fact, I wouldn't even call it an investment, Teddy. I'm going to go ahead and say that it's just a wealth management tool. But when opportunities or unexpected needs arise, it is something that is there, available, liquid, and it doesn't put an added stress on you when you need to pull the funds for something that comes up, period.
Okay. Okay. Awesome. So just to be clear and to understand, we're not comparing whole life to investments and per se the stock market. We're talking about different purposes entirely, right?
That's right, Teddy. Different tools, different jobs, both important. I'm not for or against either. A specific time, specific need to match specific goals.
Awesome. So here's some wealth wisdom, right? And one thing I've learned working with families, trying to do what's right for my family, whatnot, is that many people chase the highest return but overlook the importance of flexibility. Having access to capital when opportunity presents itself can be just as valuable as learning another percentage point of return. Getting that money, working in multiple places, and really getting the best return if you really want to think about return. How wealthy families usually think. One claim people hear all the time is that wealthy families use permanent life insurance. Is that actually true, Gabe?
Yes. Yeah, that is a true statement, Teddy. But it's important to understand why. Businesses create wealth, Teddy. Real estate creates wealth. Investments create wealth. Life insurance, generally, it doesn't create the wealth that people think of when we think of that bucket. It helps protect and it helps transfer wealth. So, we're going to talk about a family that some of you may or may not have heard of. The family is the Rockefellers. They're well known for incorporating the whole life or permanent life insurance into their broader estate planning strategy. That also included trusts, businesses, and philanthropy as well. Business owners also use life insurance to help fund buy sell agreements, create liquidity, and support succession planning. It's important,
Well,
Teddy.
yeah, so they weren't really looking for another investment when they were using their permanent life insurance. They were looking for solutions to pass down generational wealth.
Correct. That's a different way of thinking.
Okay, so another statistic that really caught my attention comes from family wealth advisors. And it's often reported that about 70% of affluent families lose their wealth by the second generation. That means one generation builds it just so the next can spend it and blow it. And roughly 90% by the third generation. That tells me preserving wealth may actually be harder than creating it.
Yeah, I agree with you, Teddy. The challenge usually isn't finding another investment. It's preparing the next generation to become wise stewards of what was given to them.
So here's a retirement reality. When we build retirement plans, one number always stands out. Around 40% of retirees rely on Social Security for at least half of their retirement income. That's only half. And that's only 40% of retirees at half of their income. That means there's a big gap. And that tells me too many people reach retirement with not enough income producing assets.
Yeah, like Social Security was designed to be a foundation, Teddy, not a complete retirement strategy. That's why building multiple sources of financial strength, it's going to matter in the long run, especially when we start speaking generationally. For one family, that might include a retirement account and investments. For another, it could be a business or some real estate. For some, it's properly designed permanent life insurance. For me, that's what I'm going to choose to do. I know that I can have something that's guaranteed when I pass to be able to grow wealth for my family and I can transfer it. if structured properly using trusts or other types of protection vehicles on top of the life insurance, Teddy, we really get an answer that can protect my family's goals. But again, it depends on what your goals are for your family.
The answer depends on the family's goals. Got it. So that's why comprehensive planning matters. No single product should carry the weight of your entire financial future. I know you guys heard the saying, don't put all your eggs in one basket. But what if you could split your eggs into many baskets, right? So here's a legacy lesson. And I think for today's conversation, it comes down to this: financial knowledge and wisdom isn't really about finding one perfect product that's going to give you the biggest return and make you the most money. Is it more about understanding the purpose, right? And the use of every tool available to you. And that's what the wealthy do, right?
Yeah. But Teddy, we also have to stewardship. And stewardship isn't just about growing wealth. It's about protecting it. It's about doing the right thing and preparing your family so that when you're no longer here on earth, you're leaving behind more than just money. The greatest inheritance we can leave isn't just financial, it's wisdom, it's a better character, and it's a plan that sets them on top of your shoulders so that they may move again, stewarding what you gave them to give it to the next generation with the same stewardship model that you left.
Okay. I like that. So if today's conversation helped you or anybody better understand one of the most understood financial tools, we'd encourage you to share this episode with someone who's trying to make sense of it. And if you guys have any questions or it just wasn't enough info, I think we're probably going to do a part two and really dive into the mechanics. And maybe at some point we'll do maybe some slideshows or something that will kind of really give you guys a visual on making all this make sense and just kind of going over the facts on life insurance itself.
Absolutely, Teddy. So, guys, stay tuned. In future episodes, we'll also go over potentially some planning, and then we'll look at what other people are saying and we'll have a little conversation about that and talk to that. But if you'd like to sit down and have a conversation about protecting what you're building while pursuing your long term goals, we would be honored to help you. So, thanks for joining us today on the Living Legacies podcast. And we'll see you next time. Because remember, wisdom builds wealth, stewardship builds a legacy.
That's right, guys. Mission over commission, clarity first, and you always.
Have a good time. See you guys next one.